Good evening, my dear members. Welcome you all for the continuation of the series of Think Global and Serve Global. Today we are going to talk about UAE taxation laws. For this, we have CA Uday Iyer. I request CA Kavita Parmesh to escort him onto the dais and welcome him with the book. Can we have a round of applause for the CA? I request CA Kavita Parmesh to give the welcome address for today's gathering.
Good evening and welcome to this study circle meeting. Most importantly, like we promised, we are coming up with the series of this. We finished we finished UK. US was supposed to happen, but unfortunately that day whatever we scheduled, the speaker had some personal emergency. So now we are with the UAE and we will get the US series once more, and also plan to get Australia and other eastern countries also. Apart from this, there are many other programs which have been lined up on this. But most importantly, I think UAE, why is it important at this point of time is, after corporate tax coming in UAE, there is a lot more scope for Indian CAs to take up. And moreover, when you look at the law, the entire UAE taxation, mostly it is all written by Indian CAs. It's not different. So there is, and the CAs in India are always trying to handle the way we get our the articleship and the training is made, when it is good enough for us to handle any tax laws outside country, outside India. So therefore we thought this is relevant, and there is a lot more scope to look at and take up this as a vertical of new practice. And today's speaker is going to talk about the tax laws mostly, and how the UAE tax laws work and what it is, so that you get a gist of it, and then most importantly, you get that confidence, yes, we can handle this. So I would request all of you to take this opportunity, and thank you and have a good learning.
Thank you. It is my pleasure to introduce today's speaker, CA Uday Iyer. Uday is a director in international taxation and transaction services practice in Bangalore, specializing in transfer pricing. A chartered accountant with a master's degree in economics from Madras University. He has been advising multiple multinational companies across manufacturing, distribution and service sectors on cross-border transactions, transfer pricing planning, documentation, controversy management and advanced pricing management agreements. He has represented clients before Indian Revenue and appellate authorities on various transfer pricing matters. Uday is a result-oriented transfer pricing professional who strongly believes in sharing knowledge, collaborating with diverse stakeholders and continuously gaining new insights through professional experiences. So with this very brief introduction, I present before you today's speaker, CA Uday Iyer. Over to you.
Thank you. Anyone at the back? The ladies, you want to share something, what you expect today's session to be on? I'm sorry, I just want to make this a little more interactive, and I try my best to do that.
I want to know how US taxation, UAE taxation is happening there, and what is the difference between Indian taxation and there, and how penalties will be there here and there. What is the compliance in India and UAE? Like we have GST, there they have that. What is the major differences? And we have income tax, and there some tax will be there. The differences and all. Okay. How to take the opportunities from there?
Okay. So by and large, everyone is of the view that they are doing a practice. They have either started or they are continuing. They want to spread wings, if I could borrow the words, to look at what's the market looking like in the UAE, and whether it is really worth practicing or learning something about UAE and working towards that. That's the broad understanding, the expectation of today's session. Yeah? In the UAE. Okay. I think I just need to have the chairman back and say, probably you've got the wrong speaker. But I'll try my best to answer some of the questions through my own way of how to address certain exact words that you say, how to spread my wings. I will only just do that.
If you are covering both mainland and the, then I understand there are two separate way of practice. One is mainland UAE and one more is free zone. So we'll be covering both because
I'm going to cover. Fair enough. Sorry, please come.
so happened to be working in one of the UAE related assignment where we were incorporating the company. So there was a much more confusion whether to go for a mainland or a free zone, what are the compliances. Happened to work with the UAE firm directly. So hope you will be covering both the compliance part or incorporation procedure and other whatever the applicable compliances.
Yeah, that's why I said I want the chairman back. Probably they got the wrong speaker to discuss today's topic. Okay, so I'm going to share the briefing that I have or something like this. That since you are working in transfer pricing, there's a lot of discussion around transfer pricing in UAE. Can you give a brief about UAE transfer pricing practice? And the immediate reaction is, I don't practice in UAE. I practice in India. So why me? So they don't have speakers who are from UAE coming to India, so you might as well speak about it. So I kind of brushed through some of the PP laws of UAE. And as someone, the predecessors have went by and said, I think the Indians have gone and created the law of PP in UAE. So it's more or less the same as it is in India. My initial reaction is it is more simplified than what it is in India. So at the end of the session, what I'm going to share with you all, or rather I would expect you all to take back, is the topic of intercompany arrangements, which is going to be discussed at length when you are dealing with clients who are in UAE. And how you would discuss those conversations with the clients. And what are the key areas that you need to look at. This is what I'm going to in a nutshell share with you all. To say you will spread wings, I would only think like this, that I can only enable technical knowledge to you. How you want to use it to your advantage, I'm going to leave that to you. I hope that's okay. I hope we are in agreement. Okay. Well, so with that background, I do see some grumpy faces, but I assure you after 2 hours you will not be grumpy. That's for sure. I see some smiling faces, so I can continue. Great. Anyone knows transfer pricing as a subject? Yes. How have you dealt with it? What do you know? In India practice, that's what you've dealt with?
Naturally, audits, if you have a related party, like you have parent there, child, subsidiary, you have releasing an invoice, mostly applies to software companies, captives, where they have a
Mostly cost-plus companies.
So,
Mostly costless, okay, but you say parent, subsidiary, fair enough. Anyone else has any initial reaction in terms of transfer pricing as a topic? Okay, you said cost-plus companies, so I'm going to ask you this. What is cost-plus according to you? What do they do?
Basically, the outside company will incorporate the subsidiary of one of the companies in India where they arm's length prices we have to arrive, and we'll have to whatever the cost the Indian company incurs, we'll have to bill it to the parent company so that we'll be able to. We should be able to generate the revenue with profit. The pricing should be fair in the market overview.
Okay.
Usually we are 100% fees.
Okay.
Those are entries through the back end work, and then the remuneration payment costs.
basically regulates the related party transactions. You have arm's length pricing, and there are various methods to arrive at that.
Yeah.
Typical example would be GCC setup.
Yeah, so the captive, cost plus, GCC, limited risk. all of this gets covered.
To cover the basically to secure the taxes of the Indian tax revenue, basically, I would say.
Right. So, in simple terms, if I have to say, transaction with related party should be conducted in such a way that it is on an arm's length basis, as if it is undertaken between two unrelated third parties. And to that effect, there are prescribed methods which determine what is arm's length pricing, and there are certain compliances in India in terms of who has to file what documentation has to be maintained, and once you have completed that, you go through an audit cycle, go through various bodies of appellate bodies, and eventually you win over any of the controversies that comes. Can it be different in other countries? Any guesses? Can it be different transfer pricing as a topic? Okay. Anyone else has any thoughts? Contrary to this, principle will broadly be the same.
Depends on country's policy, I would say, because the main intention of the transfer pricing is to secure the tax revenue.
Okay.
There is no, profit moving from one place to another place. The multinational company which does the transfer, profit movement of generating profit from one country to another country.
I agree, but can the principle be different?
Most
You answer the
most of
question.
them borrow from OECD paper, most of the countries.
Right. The principle will not be different, right? I think one of the reasons for me to choose transfer pricing 13 years ago was only for this reason. That I could practice probably outside of India. I could, when I said practice, is not in the context of what you guys are doing, but I can work outside of India. And there's no restriction in terms of the countries, whether it's UAE, UK, US, any location. Transfer pricing as a subject, unfortunately or fortunately, is broadly similar across the world. The only difference is that there could be variations in audit precedents, controversies. Probably in the US, UK, it could be a little different. Maybe in India, it could be different, but the principle remains the same across. And you know why? It's not a tax subject. It is not a tax subject. It's economics, it's commercial, and it's business. And if you have a different opinion, then this is not the topic to discuss. And therefore, no law in this world can dictate a businessman how he has to conduct his business. So the principles and frameworks will remain uniform across the globe. So the first question is to look at, I want to practice or work around UAE, TP, I don't have knowledge. So long as you have India knowledge, that's more than enough. So that's a myth that you need to get out of it. Second, anyone knows what's a supply chain in a company? Anyone familiar with the term supply chain?
Basically vendors.
Okay.
Vendors, logistics, R&D procurement, everything.
Okay. In any company that you take a look at, there are three broad categories. I'll take it out. Am I loud enough for everyone? If I speak like this, I'll put it up, right? I don't need a speaker. Keep it here, just in case.
No, but for recording purpose, the speaker is there.
My words are IP generated, so let it not be recorded. Okay, so in any company that you look at, multinational company, there are three broad, subcategories in terms of supply chain. There is something called R&D, there is manufacturing, there is sales and distribution. Are you all familiar with these three terms? A cost plus captive service that he was referring to probably will come under this. GCC in India is nothing but an R&D center, majority of them, or a support center. Manufacturing, I'm sure most of you are familiar with, and then there is something called sales and distribution. Anyone knows characterization around these different buckets? Anyone has heard of different characterizations? What are different types of manufacturing companies in India? Any thoughts? In TP parlance, I'm asking.
Good manufacturer, contract manufacturer.
Okay, so we'll start with you said contract. You said tool. I've already drawn 4 arrows, so I'm assuming you will know what it is. So, which are the other 2?
Principal manufacturer.
Huh?
Principal manufacturer.
Okay. The term that we typically use like an entrepreneur.
Yeah.
Don't ask me the spelling in the world of autocorrect, I don't know the spelling. So, right. What's the second one that you can think of?
License.
Who said license? Okay. So you can also join me. Now, what's the difference between all 4 of them? Other than you, sir. I think you will know it by now. Let's ask somebody who knows the difference between all 4 of them. What's the nomenclature of, say, an entrepreneur? You shared, right? So what does it do? Just
They'll be manufacturing the products of their own directly without supports of other than parent entity. They'll be taking the support of parent entity in the terms of their copyrights and their know-how, technical know-how and all.
So when you say they will take help of the parent entity, can they be entrepreneur then?
Because they'll be manufacturing totally in India without the support, like they'll be principal manufacturer kind of thing.
Principal is
Yes.
taken in all categories.
Yes.
By virtue of India laws, they will be principal, otherwise there will be a P in India.
Yes.
So they are on a principal to principal basis. So I am with you on that. But what is the difference between okay, that's the difference there. Okay. So let me without further ado to something like a full-fledged manufacturer. So the word that he used was if there is benefit that it receives from its parent company, only relating to manufacturing the products. That is nothing but you are giving a license to the manufacturer, a right technology, an IP to produce. Therefore, it is a licensed manufacturer. When you don't have that, you become a full-fledged manufacturer without any IP or license. I hope this is a very subtle, small difference. You should be familiar with it. Because when you are having a conversation with anyone outside of India, the first thing that you need to ask is there any IP being given by the overseas office to manufacture these goods in UAE, in any of these locations? The moment there is an IP being given, India, if it is a manufacturer, you will classify it to be a licensed manufacturer. You have a license to use, exploit the IP of a foreign company. Okay? Now, what does a contract manufacturer do?
Taking up the job works and all.
Okay?
Basically, I have the capability and the foreign wants to use my capability.
You have the capability. Some examples of contract manufacturer?
Basically,
Giving
medicine.
their medicine manufacturing to someone else.
I thought you will use the term mobile handsets because it's vague. Apple is a contract manufacturer? No. Foxconn. So Foxconn is a contract manufacturer. doesn't get technology from Apple to manufacture their handsets, then it should be a licensed manufacturer. Rather than
Given contract, they will manufacture it, give it back to the principal.
Okay?
They're not going to say it.
They're not going to sell it.
They're not going
That's
to.
what I
So that is the
think.
difference according to you between a contract manufacturer and a licensed manufacturer.
Yes.
That if you sell it back to his words principal, then you will become a contract manufacturer. If you sell it to a third party, then you become a contract licensed manufacturer. Everyone agrees? Everyone agrees? Yes? Sir?
Yeah, the license manufacturer do additional marketing.
Okay. So let's put it this way. You have given the example of pharma business. Somebody said, like you will manufacture the drugs, you give it to whom you want to give it to. Give the names.
Like if Cipla is having a contract, they cannot manufacture it everything by themselves. So they'll have to give it to some of the small pharma companies who will manufacture on behalf of Cipla and then give it back to Cipla for their distribution.
Right. So then, how to manufacture? Cipla will tell.
Cipla will definitely give the formula and everything.
So when you give the formula, what do you give?
I give them my
So then what will you classify the manufacturer?
Could be both actually. Instead of doing this one.
When you're giving them instructions, you don't give them a license to exploit the license. Not that they can start using the formula for other people. It's restricted. And I'm giving them permission to use whatever. It's restricted.
All of you have to just go through one ruling. I don't have the citation. It's of Sony, Delhi High Court. Just take a look at that. Maybe if I can, I'll forward it to the secretary here and they can share it with you all. Just look at the judgment. It's much more interesting. If I am the principal, in this example, if I am Apple, why would I give the IP in relation to anything to do with manufacturing to Foxconn? Can not Foxconn give it away to someone else and manufacture the same product? So why would they do that? They wouldn't. So they will not give the IP.
Just giving some formula or some instruction.
So they will even give anything to the contract manufacturer. Anyone else has a different view, thought?
No, they will do only hardware manufacturing only.
They will give only the hardware.
Hardware manufacturing only. They will give software and all, they are taking the control.
So only hardware, there is no IP. But software, there is IP. Somebody said no, so I'm going to ask that person. I don't know who said it.
So I think encrypted kind of,
It is a.
encrypted kind of the thing.
So on the assumption that Foxconn cannot decode it,
Yeah.
right? It will give something. Okay? Anyone else? So I think in the commercial terms, you have to understand that if it is my IP, I can never give it to anyone. The manufacturer will never get to know what he has to do. Therefore, all these Foxconns and the likes of these companies, they are called as electronics manufacturing services company. They are only assembly. They are not doing manufacturing as such. They are getting different parts, assembling it, making it a finished product. So now do you think that Apple will give any IP to Foxconn? The only difference is that Foxconn will be communicated, create a line, these many components will come, this is the SOP, please assemble that, make that as a finished product and sell it back to me. Mind you, the distinction is not the same that will be made, whether it is to a third party or a middle party, to differentiate between a contract manufacturer or a licensed manufacturer. The difference is in what is being given to the contract manufacturer that differentiates it to be a licensed or a contract manufacturer. If I give an IP to a manufacturer, then it becomes a licensed manufacturer. But if I do not give an IP to the manufacturer sells the goods either back to me or to any unrelated third party, it can still be classified as a contract manufacturer. With the same example of armor in some form, I'll try and give another case. Maybe it's an ink manufacturer, you get pigments, you get concentrates, right? A pigment manufacturer is different, concentrate is different, but they're all classified as contract manufacturer or full-fledged manufacturers. They give it to one more entity who puts a stamp and sells it. In that process, what they do is they mix concentrate and pigments and makes it as whatever diluted ink, and then they sell it. That assembling function, that can be a contract manufacturing activity. But in that process,
brand they will sell.
ink, which brand, who is bothered about the brand. But in that process, if the ink, how much of concentrate, how much of pigment, how much of the furnace, what is the process behind making it as a finished product, that is given by a parent to the Indian entity to assemble it, then what will you classify India? Akin to a licensed manufacturer. Because you are giving them the technology in terms of, you can't sell pigments on its own, you can't sell the concentrates on its own. Somebody has to assemble it, somebody has to add more masala to it before it sells into a third party. That masala is what is nothing but an IP given by an overseas office in this example. And that is an IP which will differentiate between a licensed manufacturer and a contract manufacturer. I'm going to pause here. Have I confused you all so far, whatever you have done in your business, or am I slightly making sense? If not, I would like to clarify more.
So I have a doubt there. So when you say Foxconn is an assembler, right? So but somebody is manufacturing those components, right? This is the requirement of Apple or whatever mobile company, right? So those are the manufacturers there, and they will be getting some information from a mobile company. Just I want the component to be like that, the specification has to be like this, the quality has to be like this, blah blah blah, whatever, right? So are those called manufacturer or like are those like entrepreneurs, licensed, contract manufacturing? Where do I classify them?
See, before I go, and since it's recorded, I'm going to say this. I don't work for Apple. I do not know about Apple. I will not, please don't hold me responsible if anything is factually either accurate or inaccurate in terms of their fact patterns. You're talking about suppliers supplying components to whom? Who is going to give them an instruction as to the component should be of this size and shape? So, that answers the question.
So those manufacturers are licensed manufacturers.
Is Apple telling them how nuts and bolts should be? Is Apple going to tell them how the panel size and shape should be? Right. Now, if I have to say you give me 100 screws of this size and shape, you're going to make that for me. Whose IP I'm going to use it? Apple's IP or your IP? So you may be the supplier of that product. It doesn't matter for me. You are an unrelated party for me. But what is the most important element is who is directing them to supply those components. Are there any price discussions already in place in terms of what price per unit? Who is deciding on all of these things? The moment you get into questions like this, your answer would be very clear in terms of what that component supplier is all about.
The same goes with the customers selling also, right? For example, you hold in a contract, it can be sold to either principals or others also. So, if the person who is mixing two things or whatever the example you are doing, so he is mixing two things and selling it to the separate party, it's totally an unrelated transaction. So nothing to do with the principal parent or whatever the company who is telling you to mix, and this one. So it is basically, it's a pure transaction. There is no relationship as such. So how it will come under what is it? Transfer pricing.
So the question, great, thank you. So we'll take the example of what Sir gave, and I'm going to add some more transaction flow into this, okay? So you have a India entity, you have outside of India. The component comes from outside of India. India then does whatever mixing, sells it to third party in India.
Yes.
Right? So this is your question.
Yes.
Where is the parent? Parent is in holding company, would be in outside of India.
Yes.
I'm just making this. Fine. TP is third party, not transfer price. Third party to customers. Holdco. Indian is a subco, right? Now, sir, you can come up. Just come up.
No, it's okay.
No, I want you to come up with some examples more. Just come up, no? It will be easier. Right? You are saying that India is a contract manufacturer. Sale is to third party.
Third party.
Where is TP in this?
Yeah.
Right?
Yeah.
Who has told this Indian entity to manufacture?
No, that is holding. There is no transaction as such between the holding company and Indian company.
So there is an example where a holding company and there is a subsidiary,
Yeah.
whether it's in Dubai or India. Let's take India as an example. Indian subsidiary will manufacture on its own,
Yeah.
sell it to third parties. There is no role of the holding company.
Yeah.
Right? There is no transaction.
Yeah. There is no transfer pricing involved there.
Yeah. There is no transfer pricing involved.
There must be some loyalty, so for the know-how.
Somebody has to give the know-how in terms of what to manufacture, how much to manufacture, why to manufacture this. Who will give that instruction? In the very example that we have, ink assembly or concentrated pigments assembly, it's not something that anyone can do on their own. They need to have some know-how. The know-how has to be either with the Indian entity or the foreign company. If the foreign company has the know-how, we will pass it on to the Indian company. Now, for the purpose of know-how being passed on to the Indian company, there has to be certain fee payable to the foreign company. Yes?
But will it not be covered under licensing? And I'm just.
So when the holding company passes on technology, Indian entity can become a licensed
Licensing will not be coming under contract.
It will not be akin to a contract manufacturer. But when the role of the Indian company, and the reason for calling you was examples. In the example that you gave, India becomes a licensed manufacturer because there is an IP given by the foreign company. If I go back and change my own question and say, hey, this is only mixing. There is no IP involved in this. The involvement of the foreign company is only to ensure that logistically you supply it to the customers at the right time. I will identify the vendor for you. I will identify the raw materials for you. I will make sure that you get it on time, mix it and sell it to this customer at a price I have determined already. What is the role of this entity? Was I too fast? I'll rephrase it.
Is it something PepsiCo giving rights to borrow the
Or I don't know. It's recorded. I have no idea. But you think like this, right? Is an example. I will tell the manufacturer what's to manufacture this, sell it to this customer. I have already agreed the price. Here are the raw materials. This is what by you need to source. Place the order on them. They will supply it to you on time. Make sure that you sell it on time. Go do a backward computation of when the selling has to happen. Do the logistics, all of that. I give you my ERP system. I will give you my software. Make sure that you mix it to the right amount and concentrate, etc. The purpose of just making this example a little more is only to tell you that when you are having a conversation with your clients, ask all these questions. While I have given you what is a licensed manufacturer, what is a contract manufacturer, but within that there can be multiple variations and no businesses are the same. I also assumed it in 12-13 years, it is not the same. I'm sure some of you are more than 12-13 years of experience. All businesses are not the same. There is something unique, different. So please ask these type of questions. You will be able to understand and appreciate it better. I'm going to add more to this. Very same example. We spoke about license, we spoke about contract. What if I say that after you assemble the finished product, give it back to me? That is the principle here. Then, what would that be?
The contract.
Still a contract? Sure?
Yes.
You can't be told.
Technology is not transferred.
Told. Okay. In India it's a little challenging, but outside of India you will find it. In India you will say akin to a toll manufacturer for a simple reason. The moment you invert the goods in your name, then you are going to be the owner of the goods. In a toll manufacturer, you are not the owner of the goods. Think like this: I buy goods based on my parents' request at a quantity, at a price, composition determined by the parent company. I get it, I assemble it, sell it back to the same parent company at a price that he has already confirmed to me. He gives me money within 30 days, 60 days or in advance. He ensures that all my goods are taken back by him, not a single product is left behind. And he makes sure that he also compensates me if there is any logistical issues that happens in terms of pilferage or otherwise loss of goods. In India, you will find something like this, like a job worker. Job worker is more like an agent will be slightly different in characterization. Now, in India, at least you will not find it for the simple reason that compensation gets a little challenging. So we use the term that the Indian entity its profile is akin to that of a toll manufacturer, and therefore the return that it needs to earn has to be lesser than other manufacturers. It's a commercial term. It is only business. Now with this background, let me ask this question. Amongst the four categories, who earns the maximum profits? This one? Anyone else? Any other thoughts? Who earns the maximum profits? Sorry?
Usually holding company.
Oh, I said of the four options that over here, the four categories that I have given, who will earn the most profit?
First one.
The first one, I hope everyone believes that. Why? You are very emphatically saying yes. First.
Because over here, in first answer, everything is licensed by him, is manufactured by him, is stored by him. In that case, all the margins, he is overcoming all the margins so that he is earning better.
So we will get the first highest.
Yes.
Who is given get the second highest profits within those four categories? It's not in relation to the other, but as a category I'm asking.
License.
It is in this order, therefore it will be like this. 1, 2, 3, 4.
I don't think so.
You don't think so? Okay. Why do you think otherwise? I'm asking for you. No? Anyone else has a different view?
Case to case basis.
It's case to case basis.
Depends on the commercial and negotiation.
Come on. The others, the one who's paying is not understanding India market, so जो भी बोला ले लिया tips. Okay. Anyone else? Any other thoughts?
I think the first one would be both ways, right? Risk and reward would be highest. You might have the most profitability, but there's a chance of loss too.
So, I think I'm going to say like this. All the answers to a large extent can be right and wrong also. And that is why I say it's not a tax. It's transfer pricing, is commercial business, and something to do with economics, something to do with how you run a business. So from that standpoint, thumb rule will always say like this. But you can have a combination. And the reason for combination is based on the examples that I gave. You add more masala to it, things will change. So the controversies that typically happen across the board is what we call as functional asset and risk profile. Whatever discussion that I have done so far in terms of asking questions, it's nothing but what we in our terms call it as FAR profile. What is the role of the Indian entity? What do they do? What is their responsibility? As a function, what do they contribute to the overall value chain vis-a-vis the overseas office? Someone said principal, subsidiary, principal to principal basis. All these questions are the only determining factors to say whether you are a full-fledged manufacturer, licensed to contract or floor manufacturer. So now in the example, a friend said he will sell it for $100, can I say, to a third party. You will purchase it at what price? You know the selling price. Let's take an example. You know the selling price. I have to sell it to this third party at $100. Third party and Indian subco is third parties between them. Commercial arrangement, no TP involved, right? Yes or no? The Indian company sells it at $100 to a third party in India. So let's take 100 rupees. What price should it buy from related party? The components, raw materials.
Lesser than 100.
Lesser than 100, obviously. Yes, thank you so much. You must know silent upline. Did I ask the wrong question? Yeah. So he has to buy it at lesser price. So now the add-on example is what I had given you. The foreign company determines what price you have to buy from this third party. He determines that you should buy it at 40 rupees from this third party. What is the gross margin? 60. Now India has 60 rupees as gross profit. I'm sure it will have its own expenses. So what was India in that example? A contract manufacturer. So what will he have? Plant and machinery. Some employees. Right? Huh?
Rentals.
Sorry? Rentals, okay. So he will have, so below the line items, I think I'm sure all of you know the P&L, so I'll put it this way. There, some expenses, OPEX, everything. How much do you want those expenses to be putting together? 40, some example random. What is the net profit? Huh? 20, that's it. On what? 80 rupees. 20 rupees on 80 rupees. What's the percentage coming down to? 25 percentage. So in the example of Apple, it's watching me, but I just said this. Foxconn is earning 20% profit.
US companies are giving the cost plus profit.
So, no? So,
some US companies are getting holding company giving cost plus profit, like what are the costs are doing, 10% markup they are doing.
Yeah, but that's, I mean, we'll come to that. But in this example, if we have to correlate with Foxconn, it is earning 20% profit margin, right? 25, so 20 or 25? 20. Now, what does this company get in return? What does this company, the holding company, get in return? It is doing what functions it is doing?
Arrangement.
It is doing all the arrangement. From whom to buy, at what price, when to buy, and the example that I gave, how much to sell and at what price to sell. So for these functions, the holdco also get something in this, right? How would it get?
They will sell at their local markets or anywhere.
So sale is only in India, right, in this example. And the function is,
Holdco will sell at their local markets.
so whatever it does for the India market, so generously subsidiary, I will not charge you anything.
They will charge.
Okay? No charge.
They will charge some management fee, royalty or
Okay? Management fee, royalty, fees for technical services. Anyone else? Sorry?
Commission.
We charge commission. Holdco will charge commission. That you sell it at 100 rupees, you pay me some price. Okay?
But over here, it is the subsidy of the holding company. Whatever is the earnings of this subsidy, technically it will be a holding company.
So, if the money is in India, it is holding company's money. It is as good as money in my bank account.
Valuation of that company will be your own asset it is.
Okay? So Holdco in this example will deploy a procurement head, a scientist to do the right mixing, and the Holdco will also have a sales and marketing guy who will identify the buyers. But generosity of the Holdco is I will not cross-charge any of these services to India. Because at the end of the day, it is my money sitting and lying in Indian entity, correct?
Your own asset, right?
So why Juma take some charges for it?
So they'll have to follow the transfer pricing norms of their country. So they'll have to charge.
That is why I again reiterate, transfer pricing cannot be different in different countries. It has to be broadly the same. And therefore, when I choose the subject, it is with the intent that I will go out of India once when I never went. I have worked with a lot of these multinationals. It is the same. Once again, I am going to reiterate the myth that there is no, other than some regulatory bars of who can do what, transfer pricing as a topic, we from India can definitely advise based on the right questions that we ask. Respective jurisdictions can have add-ons in terms of compliance requirement, add-ons in terms of certain judicial precedents, but principles remain the same. The tax authority of that foreign company can say, hey, you are doing all these functions, why haven't you cross-charged? It could be in the form of management services, support functions, sales support services. If it is in the context of technical know-how, they will charge you a royalty. If it is not in the context of technical know-how, you can't actually charge a royalty. You will charge some other support service, procurement fee, something like that. Okay, so if I have to summarize this in terms of what would be your client conversation, who is based out of UAE, who has businesses in different countries. Give me some 3 broad headings that I can ask you guys to ask the right questions. So somebody can ask, maybe I start with you. What would be the first 3 questions that you would ask? Your client who is based out of UAE.
Okay. We will ask, first of all, we will understand what is the nature of business, what is doing. nature of business is very, very important. Then further we bring it down into the next level. What type of, once the business we understand, then what is the arrangement he is having with respect to the supply of, with respect to the manufacturing. What type of manufacturing, how we do, like we need IP or like, we need to understand how basically he planning his business.
Basically how?
Basically how he will be planning his business.
Okay. And in that process, you will understand whether he is a toll manufacturer, contract manufacturer, license manufacturer, which entity
Yeah, if
he
we
is
based on that, whatever the conversation happens, again we can further drill down to the next level.
Okay. How are you guys doing already all of these things?
Yes, at the time of like once client comes, we ask and all the questions really, then further we will go into next level.
So was this one side of the arrangement useful?
Yes.
We just started it. I will go to another leg. Are you guys okay with going to the other leg of it? Could you just repeat it? Yeah. So, as I said, it is twofold, right? If there is services in the nature of IP in relation to manufacturing given by the whole code to the subcode, then there is nothing but a royalty or a license fee that is being charged by the whole code. If the whole code is not performing any of these IP related transfers to India on a license basis, but undertakes all these support functions in terms of procurement, in terms of probably to do with the how the ERP system should be, ID charges should be, corporate offices, what role they play in this overall stuff. That we are into a management support. So, to my mind, the question should be more in terms of what is the role of the foreign company and what do they do. And I'm sure all of you will be smart enough to characterize this as FTS, royalty. You can look at the treaty provisions and come back with a better answer in terms of withholding and so on and so forth. Right? So, most of us actually start off with the law and then ask the questions. So, if you ask these questions and then go to the law, it helps to answer them better. That's my experience. So, we discussed about manufacturer. Now, the second leg that I am in favor of is something known as a distributor. How many of you are familiar with different types of different distributors? Anyone? So, I'm going to ask you.
Limited risk,
So, limited risk distributor. And full risk distributor. Okay. Now, anything else that you think it will be? Any other distributor possible? Somebody gave one word here. There's a word that I didn't say, it will be slightly different. Agent. You would have heard of agents who will buy and sell it, right? They earn a commission. Now, what's the difference between an LRD and a full-fledged distributor? Anyone? Is the term LRD new? Has anyone heard that? Do you know? No? Sir? You've heard LRD, limited risk distributor, anything like that? No? Okay. So you have any experience on that? Yeah.
Mainly do with basically the function which is carried out.
Okay. In terms of what difference would be the functions?
So LRD will basically more of kind of flash sale kind of body. But the LRD will not give the title to the goods basically.
Okay.
Whereas in FRD will hold the stock the goods inventory.
Okay.
That's in terms of function. In terms of risk also.
Okay.
LRD will not take the credit risk basically, charge out the principal. Whereas FRD, the agent or the Indian entity will take the full risk. Credit risk and not other liquidity risk, credit risk.
Sure, we'll come to the risk part, but in terms of functions, you said there's a difference. You will contradict to that. Please.
What I understand with respect to these three full-fledged distributors is, that's just one example what I can give you is, say for example a milk distributor, okay, because he distributes it to, I mean this is a simple term which is being followed in the market, a small business. Milk distributor will take milk from the company, say for example, manufacturing agent, and it is his duty to distribute it to the different shops. If there is any risk of expiry or leakage, that will be in the hands of the FFBs. But in case of limited risk here, the distributor, the person who will distribute it, will not take up the risk of any expiry or leakage. But in case of an agent, it is his duty only to distribute the products for the list of people given by the manufacturer. He just acts as a carrying agent. It is simply a CM, carrying and forwarding agent.
Yeah, fair enough. I think by and large it's fine. Anyone has any thoughts around this? Any examples that you have? You guys spoke about Apple so much, so why don't you just tell that? What's an Apple in India? Manufacturer? Licensed manufacturer? I don't know, by the way. Again, reiterate, I don't know. But from the looks of whatever you read in the newspaper, what is Apple in India? Contract manufacturer. We just spoke about who's a contract manufacturer before that. An Apple in India can be either a licensed manufacturer or a distributor. Right? I just explained a bit. An Apple in India can be either a licensed manufacturer or a distributor. If I've given understanding of what I'm going to do, we will have third-party suppliers that you gave as examples, gives it to Foxconn. Foxconn makes the product, gives it to who? Apple in India, and Apple in India will do what? Put its stack and sell it. So what does India do? Sorry? What does India do? It's doing distribution. It is doing distribution. Just for the silence, it is doing distribution. Now, how much should it earn for the activities that it runs, undertakes? Who will decide? Huh? Indian company will decide. So, Tim Cook, you don't really care about profits in India. I will decide how much to sell it. I'll make profits. This is my profitability. No? Yes? Okay, the silence kills me. Did I crack a bad joke? Then you can tell me it was a bad joke, but it's okay. But just don't be silent. So Indian entity will decide how much to sell it. So Apple price in India is determined by Apple India at what price it has to sell it, whether it is high or low, the profits are going to be in India. Apple US does not have any say. That's what our friend wants to say. Right? Sorry? Pricing, how much to sell? 1,30,000, 40,000? Tim Cook in the US does not have any role. It's only India which is doing this. Anyone thinks otherwise? Nobody?
I think it will be decided by US because at the end, the way you say transfer pricing is all about economics, business, and
Sir, आप मेरे dialogue आप नहीं बोल सकते. इधर मैं क्या बोलूँगा? I'm sorry if I use Hindi. I kind of a combo of what different languages. If you want me to say it in Kannada also, I can say this. You can't actually take my words. You have to tell your words in me.
I'm not very specific to the transaction, but from a general understanding, understanding that I have, whether you manufacture in India or anywhere, the goods get exported to an country where the taxes are less, and from there it gets re-imported to the India, and then the prices are set by the US entity or the parent entity. It decides what price to be sold at, and according to the Indian entity's rate. That's how the money gets flowed. The India entity will buy the goods from the foreign
Sir, I think you should come on stage. Please come on stage. So our friend wants to say something like this. So goods will be manufactured in where? Where will it be manufactured?
Currently it's in India and in China.
So it will be manufactured in India. By whom?
By Foxconn, by the
So goods will be manufactured in India by Foxconn. Components will be supplied by?
Supplied by again, what we discussed in the FFM model there. That's how the goods get manufactured. Holdco instructs for the goods to be manufactured, and then it decides where to sell these goods at what price.
So in your example, Apple US will tell Foxconn to manufacture and ask them to buy goods from some vendor in China.
Yes.
Then Foxconn will manufacture, sell it to
Sell it to a designated entity, again decided by US.
designated entity where?
Anywhere in the
No, you said some low tax.
low tax region. So the companies are set up in a low tax region. That's how the goods
Like
get diverted. Like UAE or
Okay, so the goods will be manufactured in India and will be shipped to UAE. And then they will be shipped back to India to be sold to third parties in India. So you and I are buying goods which have gone to the UAE and come back to India and then we buy.
Possibly, I mean, it might not be necessary to use manufactured only in India, but for transaction sake, yes.
Okay. Anyone has a
So the distributing entity buys from the UAE entity and then sells it here.
so India will manufacture, sell it to UAE entity. The UAE entity will sell it back to a distributing entity in India.
Yep.
The goods will move or will it be not moving?
I am not sure.
But what is your thought?
There should be a goods movement.
There should be a goods
There
movement.
should be a goods movement.
Okay.
It can be in a free hold zone or in customs hold. Not entirely sure about it.
Why would someone do that?
Does it make business sense to move the goods?
Yeah, I'm just asking. Why would someone do that? What would be the reason for someone to do that?
So I might, so for example, the UAE entity might be buying it for $100 and then selling it back to India for $200.
They want to park profit in UAE.
You know, large profits in the UAE.
Because UAE is a tax-free country.
So ship the goods to UAE will be good.
And possibly the first question that you have asked, so basically the supply chain whole link for all of this.
Okay. You know, I do have a different point of view, but I will not say that things don't happen like this. They do, but in a slightly different manner, not the way you have expressed it. It makes no commercial sense, as our friends rightly say, to ship the goods, pay duties, goes to UAE, then come back, pay again import duty on this, then sell it. After a point in time, the customers will pay for twice, thrice the price of the goods. It makes no sense unless Apple is monopoly of sorts to kind of able to sell like this. Great, no businessman would do that first and foremost. They can do it in a different manner, and the example would be that you will have Chinese company which manufactures, ships the goods to India, bills it to UAE entity, UAE entity re-invoices to India. So bill to, ship to. I hope you are familiar with these terms. That can be one of the reasons where you can actually play around with terms of your, I won't use the term play around, where you can use supply chain of yours to be more efficient if it is commercially making sense. On the assumption that UAE becomes a hub for distributing to all entities across the world, or at least in Asia Pacific. That's why you have countries like Singapore, UAE, set up by most multinationals. So the silence is very weird. Either or not. Are we okay, clear? Any thoughts around why would somebody ship the goods, bring it back? I hope that's not the advice that we will give to our clients, right? Please don't do that. But if it is making sense in terms of the very same example that I have, the goods are shipped by the third party to the Indian company. Just assume that it is a distributor. It bills to the holdco. Holdco then bills for the same purchase to the Indian company. Are you all with me so far? The pricing is determined by the holdco to the third party. Where will the profits be? Indian company or holdco? Sorry? Indian company. I'm assuming I should remove this now. Where should the profits be? I have sold for $100. Third party has supplied, in your example, at $40. They have supplied the goods worth $40 to Indian company. They have billed for this to the holdco. Holdco then bills it to me. I then sell it to third party. Where will the profits be? If you are a true businessman, holdco is where you are, your promoters are sitting. How?
Because billing from holding company to subsidiary company, we have to be holding company.
Okay.
So if I'm getting the products at 40 rupees in that example, I'll definitely not bill it to 60 rupees. I mean, I'll definitely not bill it to 40 rupees. To see to it that my holding company, my subsidiary company will earn 60 rupees per month. I'll see to it that if I am the holding company, I'll see to it that the subsidiary company, whatever is my expenses over there, with a little margin, that I'll give that margin, the remaining margin I'll keep it with myself. Holding.
Okay. Anyone has any other thoughts? Where the profits will be? No. Anyone else has a different thought? Sir, with the specs, you have a different thought?
So the Indian compliance transfer pricing, what is the margin required? That much only they will bill from holding, because it should not go override by law.
So,
Suppose the product is 40, the selling price is 80 rupees to the holding company. 20 rupees they will pass it in India. India 20 rupees means also it is a acceptable pass of price.
okay. Sir, I think I did not ask you. Your thoughts? I'll repeat, where will the profits be, subsidiary or the holding company? It's a bill to ship to model, billing to the holding company, ship the goods to India. India then resells it to third party customers, where the pricing is determined by the holdco with the third party. procurement function is performed by Holdco. All Indian company is doing is converting the goods in its own name at a price.
Basically, normally holding company only because the control lies there, so they will decide they will prefer to keep that.
They will prefer to keep that. So in this example, what is India actually? Remove the manufacturing element. What does India do? It buys from Holdco in one paper. Goods are shipped from third party. It then sells it. What is India? Distribution. The answer lies in the terms of differences between a full-fledged and a limited risk distributor is a role played by the Indian distributor. If I am determining the price at which it is to be sold, I am stocking the goods, I am taking the risk in terms of logistics, I am nothing but a full-fledged distributor. But if I modify that with an additional facts to say that we do all these functions, but at the end of the day, I will ensure that you get profits in India, that is nothing but LRD, which is the Holdco ensures that India gets a profit. Now, when you use the term LRD, the word is limited risk distributors, meaning to say that you are managing the risk of a distributor. You can take the examples of HUL, you can have its own distributors. At the end of the day, if the sub-distributors can't sell the goods, what does HUL do? Give you more discount, it can give you some compensation, it can give you some ad fees that you can use that as a beneficiary, or it can give some subvention. In all of these things, the distributor would be nothing but either a managed risk distributor or a limited risk distributor. Meaning to say, I am compensating you for all your functions. In case you go into losses, I will help you. Anyone has example of a distributor in the example that you gave, right, of Nandini. If I am the distributor of Nandini milk, I buy from the manufacturer, the Nandini Milk Federation, whatever that is, Karnataka Milk Federation. So that is a manufacturer. I buy the milk and I sell it, assuming that I buy it at 12 rupees per pack. I am selling it at 13 rupees per pack. The differential one is my gross profit. Against that, per packet, I will have certain expenses. So Nandini will say, I will give you a place where you can put a banner of Nandini. I will ensure that you get something like a compensation fee for the infrastructure, rent, etc. That's a management that I will do. What does it do? It is nothing but insulating the distributor from going into losses. If it happens, assuming that the distributor is into losses, then it is nothing but a full price distributor. If it is managed, then it is a managed business. So from a distributor role, unlike a manufacturer, there are so many variations. It can be a little challenging from a distributor's role standpoint. The same iteration that I can do, but a distributor can have some variations in terms of the risk profile. You may not get compensation from the overseas office, but you will get some support fee from the overseas office. All of these are to be viewed based on your inquiries with the client. Are you supposed to break at this hour? Okay. You want to take a break or should we continue? Take a break. So,
2 minutes, 15 minutes.
it will determine how many will come back. Protecting my distributor. Just wait for 2-3 more minutes. We'll wait for 20 minutes. is this something that it happens every Wednesday? You will have something like this? And it is on varied topics, or is it on, she mentioned about US taxation and UAE taxation, and then there's UK.
No, various
Different topics.
like GST, income tax.
Okay. And in terms of duration or length of it, till what time typically you go?
5 to 8.
Sorry?
5 to 8.
5 to 8. And you are okay to sit for 3 hours?
On break will be there.
Yeah, with the break, you're okay to sit for 3 hours. Okay. Okay. So if I say that we will end it at 7:30, is that a problem? Okay. No problem. I just realized after a point in time how much to tell you. I just believe, I don't know, this is my reading of it, more than 35 to 45 minutes, if somebody sits, I don't think so they can learn or read or understand anything after that. I know you've taken a break and maybe we'll be fresh for 15-20 minutes and thereafter it's going to be done. You want me to share the deck, like present some PPTs and then speak on that? You like that? Not this?
If you send that PPT to us.
No, I sent the PPT, but you want me to run some PPT, slide 1 says this, slide 2 says this? No?
Not really.
So?
No, interaction.
Sorry?
Interaction session.
Okay. Okay. Okay, so I think by now we have some degree of quorum to start with. When you have more than 50% of the batch coming back after the break, there are only 2 reasons. Attendance sheet is after the break, so they will come back. Or I would like to believe that this session is some way learning experience. So let's put it this way. I would like to believe the latter. So any thoughts around so far what we have spoken? Any questions? I know in the break I had 1 or 2 inquiries. Other than that, any thoughts so far? Any questions that you have about the pace, the topic, the discussion pointers, anything that you have to share? You came here with a different agenda, but you ended up learning something else or listening to something else. This is also a learning. So the word also is what I need to underline.
Pamphlet, whatever shown was different actually.
It was different. Again, I'm going to say it on record, it's there recorded for me. I've already given enough caveats to the gentleman who asked me, but I've given that I specialize in transfer pricing. That's the topic that I know. It's worldwide use. I can speak technical topics. But if you come and ask me how to set up a practice in UAE, sorry, I'm not the right speaker. But for that, if you want, I can give you contacts to individuals who have set up and they are reasonably good. And I'll give those names and maybe you can have some discussions with them. That's something that is possible. But if you ask me, I'll answer it in a different way. And I was telling this in the beginning also. If you know this, you will figure out how to set up a practice. As if you will figure out how to do business. You will figure out how to service your clients. And corporate tax is nothing in UAE. There are some free zones, non-free zones. You will know it better if you know India tax. There is an SEZ and MAT and so many nonsense called complete code. I can't say this. Is it recorded every now and then? It's recorded. Sorry, I'm looking at you. It's okay. Please edit it, ignore it, and please don't sue me after this.
It's
Okay?
recorded but not live, I think.
That's okay. But don't upload it. I have an economics background, but CA has also something that I did it, I don't know when, how, I shouldn't say it in this office also. But I did it because I think they said that with economics background you can't get a good job. I had 2 options, either to go to a bank and become a credit rating agent's expert, or look at joining something like research work in many of these schools. I took up CA with an intention that economics and CA would be a good combination. So my request to all of you is, as a CA, you can have your own expertise around tax, accounting, finance, everything. But the way I understand is, unless you know the business, even accounting is from the business. Even your tax is through business. Whether it is TP specific, it is because of business. So have that understanding of asking the right questions. You will be able to get the answers and the questions and the responses that you get itself. Right, so just coming back to the question of the distributor here, I will just conclude by saying, as a distributor, anything that you are supposed to get compensated for your functions in India, you are akin to what we otherwise term it as managed risk or limited risk distributor. If the distributor can be on its own selling the goods without any differentiation around compensation, then one would argue that you are akin to a full-fledged distributor. Some examples of a full-fledged distributor typically would be that I end up having losses in India. It doesn't matter. The foreign company lets Indian entity continue to bear losses. The tax administrator would not be keen on it. He would assume that India has to earn profits, but then the argument would be that tax cannot dictate how much of profits that one should have. So the question that you will end up asking is, as a distributor, what is the function that I perform? I perform the functions below the gross profit level or above the gross profit level. If I'm the one who is identifying from how much to buy from the affiliates across the globe, stock it, load any other functions in terms of logistics, and then sell it to the third-party customers, there's a lot more functions that I perform. And therefore, I should get compensated for those functions. And in return, if the purchase price is inflated to such a way that the Indian entity ends up in losses, yes, the tax administrator has every right to question as to how can you be into losses. Just to conclude that piece, in the example, if the function of the Indian distributor is to sell the goods to third-party customers, it decides the price, it has identified the price to be $100, it buys goods from related party, the related party sells it at $120. Obviously, the Indian distributor can go into losses. In such circumstances, what is the expectation that you should look at, whether it is in India, UAE, UK? What is the reason for India into losses? In this example, the loss is primarily because of the purchase price being higher than the selling price. But is it accurate? Is there something more behind this? That is what your question should be. A holding company can sell it at 120. Indian entity is in its right to sell it to a third party at $100 based on its own market assessment. The question should not be why is India into losses. The question should be, is the price of 120 on an arm's length basis or not? And how would you determine that? How would you determine an arm's length price? Unrelated benchmark. Sorry. Comparative. Anything else? I'll introduce you to the new term called selection of methods. Now that's how you would actually get into how do you give an assessment of arm's length price. In this example, the Indian entity is performing a buy-sell. It buys the goods from related party, it sells it, selling price it could not be more than $100, so it's just pegged at that. Indian entity purchased the goods at $120. So the question that you are checking is between the holding company and the Indian company, who is the least complex entity? First question, who is the least complex entity? Holding company or the Indian entity? Why do you say so?
We see that it is transactions are happening at a single place. Indian entity is not having much of complex things. What do you say? Like
Complexity, what sense you are asking complex entity is?
Could be anything. You can share your perspective of complexity. In a layman's term, you will define complex entity versus non-complex entity in terms of what?
Complex is Indian firm has to see who is the buyer, he has to find out, otherwise holding company can sell himself to this person. That time it's simple.
So she said something called functions, which I described at length in a previous session. So it's the functional profile of the companies who undertakes more functions and less functions, as you rightly said, who will become a determining factor of defining the least complex entity. In this example, Indian entity is selling to a third party. I'm adding more meat to this particular description. The selling price, customer identification, stocking the goods, and then selling it to the third party. All these functions are performed by the Indian entity.
Guarantees.
Sorry?
Product guarantees.
Yeah, in terms of liabilities around product, everything, it is borne by the Indian entity. By that logic, what is this company? Is it the least complex or is it the least complex? Indian company is the least complex. Holding company. And what is a holding company in that example?
Yeah.
In terms of the very same characterization that I discussed before the break. Indian entity is buying goods from holding company, selling the goods in the Indian market, how much to sell, what price to sell, everything Indian entity determines. Huh? Okay, so Indian entity is a full-fledged distributor. Fair enough. But what is a holding company in this example? To add more flavor to it, the Indian entity tells the holding company, please manufacture these many sets of goods. What is a holdco? I'll give one more add-ons to it. That the Indian company tells holdco that you buy from so-and-so person and I will probably find vendors for you, but please manufacture 100 units of this. I have a market in India, I want to sell this in India market. Pricing I have determined already. In simple terms, the holding company is akin to that of a contract manufacturer as far as this business line is concerned. And the holdco will sell you at how? What price it would sell you? Your favorite topic? Holdco will sell you at what? Cost plus? Cost plus some markup? It will come to India. So in this example, it's sold at $120 to the Indian entity. It would have had some cost. It manufactured, sold it to India. Yes? Now in this, who is the least complex entity? The distributor or the manufacturer? Manufacturer? Why do you say so? It's a least complex entity. What it does is, it takes the order from distributor, that is the Indian company, manufactures, sells it to Indian entity. So So now when you are doing an ALP test, how would you determine the ALP test? Who is the least complex entity is the first question that you will ask. How would you ask that as a question in terms of the roles played by either of the two parties? Based on this, the least complex entity in this example is the holdco. So when the holdco is selling at $120, you need to determine whether that $120 meets the arm's length price or not. Yes? If it is in that jurisdiction meets the arm's length price, can the Indian entity go into losses? No?
Yes. Yes.
Yes.
So some say no and some say yes.
Yes.
Why would you say no, sir?
Arm's length price will be the market price, which is the transaction will be held.
So market arm's length price,
Will
could
be
you just
the
repeat?
arm's length price will be the market price, which is held in the by the others also, unrelated parties.
Is the statement correct? Arm's length price is nothing but the market price? No? Yes?
Depends on what method you select for.
What method?
So basically, yes, India's getting losses can only be because of the market condition. Like a lot of losses, not because the loss is not passed because of the
Yeah, my question was on the fact that is arm's length price a market price?
Yes, maybe.
Can be or is. So this is very important. In your conversation with the clients, a market price could be anything. If you sell a property at $100, $50, $200. But not all market prices may not be an arm's length price. Right? The question that you will ask is, how can you determine the arm's length price? So in this example, the holdco was a contract manufacturer. It added a markup on the cost of goods manufactured. This markup was considered to be on an arm's length basis in that jurisdiction. It sold to India. Unfortunately, India could not sell it at a price to make profits. Yes?
Yes.
So can the tax officer say, no, India should be cannot make losses, it should make profits?
No.
On a standalone basis? No? Right? So that as addresses or you still think that India cannot make losses?
You see the cross transaction, there won't be any losses.
But I bought it at 120, knowing very well that I could sell it only for 100. Right? So I will end up into losses. So can the tax officer come back and tell, please sell at a price higher than 100?
No.
No. So what would the tax officer do? It's as a
Whether the cost price, selling price of the holding company is $120, is it right or not?
Perfect.
After that, then I determine whether I am trying to inflate my purchase price or I am trying to leverage my losses.
They will ask for a TP study.
Basically. So I don't think so we need to wait till 8. You understood the... No, actually I'm very serious about it to say, what else will you do? So I have to sell the goods. If hypothetically Apple India has to sell, maybe enough and more, has to sell products in India. It goes into losses. Not because of the selling, not because of the purchase price, but because of the price at which it has to sell in India. You can have, I will use another example, but maybe you can do a Google check. How many mobile handset businesses were profitable in India or are profitable in India? Take a look at the answers of this. I can, as a distributor, go into losses. There is nothing wrong with that. But the question that the officer will obviously ask is it because of you buying at the price higher than arm's length. And how will he determine that? Based on the purchase price assessment of who? The holding company in this example.
In this case only, in case of war, war is happening. Obviously, the prices will, all product price will,
Yes.
they will make it for profit. Like say, in your case, 10 rupees is a profit in the Indian company, original, as per the but it end up with 20 rupees loss.
Yes.
It's a genuine case.
Yes.
That time, tax officer will record, he has to accept it.
Absolutely. So what do you need to do that?
Demonstrate.
How will you demonstrate?
Because of war and the price is gone up.
So you want to say something? So this is
Tax officer ask for the can tax officer ask for the transfer pricing basis like Indian laws? I know transfer pricing grossly is same across the world, but like can officer ask for the transfer pricing like because the transfer pricing that we are talking about with Holdco in terms of Holdco that whether they can sell it to subsidiary. So will tax officer has to accept that transfer pricing or can they ask Indian subsidiary or the distributor to do like transfer pricing on their own and then accept? I'm not sure about this question.
so okay. So to answer your question, the Indian entity has to maintain a transfer pricing report so long as it has an international transaction with related party. This is one side of it. Foreign entity in that home jurisdiction also has to maintain a transfer pricing report for the other leg of the transaction, that is sale to India.
No, that I got. Since we are in a losses here, right? So tax officer can come back saying that like, you cannot be a loss. Just a hypothetical situation. I don't want you to be in a loss. You have to pay the taxes on something.
Sure.
Right? So can tax officer ask for a transfer pricing report from Indian company or Indian distributor in our example?
When you say can the tax officer
To make
ask-
some taxes like to make Indian subsidiary or distributor as a profitable and can ask for the tax.
Can the tax officer can the tax officer ask for the TP report of Holdco company?
Answer is yes.
Not whole company. I am saying for the subsidiary company. Can
So-
they
Yeah,
ask?
definitely.
Subsidiary has to maintain a TP report for its leg of the transaction.
Only for the
So in
sales
case
company.
TP report can reject the tax officer.
Yes.
That time he may mark up 10% is a profit like.
We can do a.
But you should have a basis for arranging it.
Yes. Yes. So, I mean, in a lighter note, I'm for 12, 13 years dealing with only one section of the Income Tax Act, and assuming that I will have a practice for another 5, 10 years. This is one subject because of the tax department. I'm very grateful to them. Because they come back with their own thought process. I come back with my thought process and the litigation continues. On the other hand, the unfortunate part would be the client's suffering. But in simple terms, if I have to tell, if you are, I'm trying to get your question right. I will prepare a TP report, justify my purchase price to be on an arm's length. The foreign company prepares a TP report, justifying the sale prices at an arm's length. The tax officer questions that what's your India distribution activity is not profitable. You ought to have certain profits. But to come to that conclusion, or he cannot blatantly say like this, can a tax officer say that boss you need to make profits? How can he become or get into the shoes of your businessman? So he has to understand what is the India's goal. So India's goal is, number one, I identify customers. I undertake some research in terms of how much to sell and what price I can sell. I determine the timing of entering into this market. I determine the quality of the product. I determine how much the Indian buyers will be interested in buying all of these goods. And I then place the order on the overseas office who then ships the goods back to me. So I act as a distributor. With the pricing that I have determined versus the purchase price that I have received are not something that is meeting enough for me to break even or even make profits. So therefore, the tax administrator has to first question, is India an LRD? Meaning to say that it is it from a function profile, the pricing of it, all these functions, is there any role of the foreign company that it dictates. For example, if you have to sell some product in India, you have to look at the marketing collaterals of the foreign company. You have to look at the design, badging, how it should be displayed. Everything will be determined by the foreign company. So there is some support by the foreign company. Are you spending enough marketing expenditure in India to promote your goods, to be able to sell it? Is it the volume related issues that you are facing that you are not able to sell it at a profitable rate? Is it to do with additional functions that you perform in India which results in creation of the market and because of which you could not sell it in India? I think unless you make a documentation detailing all these activities, simply a tax officer cannot just justify as saying you should have made profits. So if these functions you are performing on behalf of your foreign company in India, you are creating marketing intangibility. And in that context, why would the foreign Indian entity go into losses? It has to be compensated. And I hope by now you all know the famous LG ruling of marketing intangibles, of advertisement marketing spend that they do. That is being questioned and it is currently before the Supreme Court. All the distributors in India spend on advertisement marketing expenditure. The Indian tax administrator is of the view that this is excessive and you are indirectly promoting the brand of the foreign company. Therefore, for this, it is nothing but a service and you should be compensated for the service function that you are doing, whether it is in the form of a service fee, cost plus or otherwise. Anyone familiar with that? Okay, I can tell you the familiarity on this topic? No? It's a hot topic in the field of transfer pricing across the group. Sorry. It's the roles and responsibility of them, which is nothing but functional and risk profile. If I'm in a position to identify, in this example, let's take this example, the product that I'm selling in India is unique, I don't get a comparable in India. But I do get a comparable in the Holdco. There is a comparability study that is available. Holdco does not have any intangible. It does not use any IPs as such for manufacturing. So you are able to determine the profitability of Holdco better. So whether cost plus, assuming it sells it to you at 5%, that's a standard margin that most contract manufacturers would load outside of India. That becomes an arm's length price. How much you are able to sell it in India, what functions additionally you perform in India, it's all your roles and prerogative. And from that perspective, it can be into losses. And then that is why the least complex here would be the Holdco, at least for this example. Okay, now coming on comparability studies, you will have methodologies available in terms of, anyone knows methods? Cost plus, that is one favorite method everyone knows. Fair enough. Transaction and margin method, right? Simply put, is there any order that I should go? First I should say curve, then I should say RPM. No choice, no hierarchy. Right? Okay, so
It has to be decided.
it has to be?
It has to be
Most appropriate. Okay. Most appropriate. So there can be more than one most appropriate? Maybe or yes?
No.
No. Not me. I'm just playing with the words. But there's something called best method. Is anyone aware of that?
Yes.
You guys had this discussion? US tax or something like that? I think she was talking about it, the chairman.
Didn't have.
We didn't have it. So most countries look at OECD based methodologies. US is slightly an exception. OECD does not describe any hierarchy. It looks at any method that is considered to be as the most appropriate method. India has adopted that. How many methods are there? 6. So we spoke about cup, resale, cost plus CNMM, profit split, any other. Must be कोई भी method, right? I mean, UAE also is the same. Unfortunately, it is the same set of people who have drafted probably. It's the same. So whatever I have spoken so far, everything is ditto the same in the UAE. Now, in this example, we are going to just draw. I think this picture is nice. Let's take this. Holdco is selling to Indian company. What method we use? So okay, question would be what method we will use from Indian company standpoint. Holdco sells goods to Indian company sells it to third party. सबको कॉस्ट पर कौन बोलेगा?
Practically that was
Resale price method.
I said Indian company standpoint.
Indian company.
Yeah. Sir, I will answer that. Sorry, you are right. I was just trying to get the others' view also. So one of the thought process that one can have is it's a resale price. But when do you use resale price?
Whenever there is no increment in the product, the product is as and how it is purchased, it is sold.
So then you are what? Indian entity is. Right? So just in case you were waiting for it. So RPM, there is, you're just selling it as is. Why would it be RPM? What are you testing? You're testing what?
arm's length pricing of a similar product.
Arm's length pricing of similar product of what? What's the underlying function that or transaction that you are testing?
Market price.
Transaction.
Distribution.
Transaction. Purchase price. That is the transfer price that you are testing. With market price, distribution function, and so on and so forth. So, how would this be in a P&L? In the example that we had, okay, 100. You purchase it at 80. Resale price method. So the resale price is this. What are you testing but 80? How are you testing the 80? You are doing gross profit assessment, gross margin, take my gross margin, look at the comparables, make it the same. Right? Who said no? Sorry. That is the fact. I didn't ask questions. Every time I would ask questions, I will probably answer that also. Yes or no? You are testing what purchase price. Resale price is what you are testing through gross profit margin analysis. Now you are just saying goods, the purchase price, India is buying from related party as well as from unrelated party. I can use what? But it says comparable uncontrolled price. So much so that there should not be any differences. So one of the examples that in another center that I have spoken about is Washington apple and Kashmiri apple the same? No? Right? So name is prefix is Washington. She says that crunch is different, so it's a brand. It's a brand. Washington is a brand and Kashmiri is a brand, so there's a difference. Sorry?
Wax coated.
Wax coated is Washington or Kashmiri? Okay. Okay. Taste difference. Okay. Anyone else? Anything else?
breed is only different.
Sorry?
Maybe breed is only different. Like import.
Breed is different. Okay? Anyone else? I think all that you have told is right, but I want to know more also. Sorry?
Nutrition value.
Nutrition value, okay?
Imported or in-house?
Sorry?
Imported or in-house?
Imported or in-house? In what context are you saying?
Customer is India actually.
Purchase cost will be different.
Purchase cost will be different because Washington is coming from Washington. So, Amit, our sir said it will come to India, go back to Dubai, then sorry, it was a lighter topic. Everyone is just looking at the clock, so I was thinking and I just drag it up.
So place is different.
Place is different. Place is in Washington, US and India.
Because if actually I'm purchasing in Dubai, the cost will be for
Dollars and rupees. Perfect. So will you apply cup?
No, it is not comparable.
Is it comparable? No, right? So just look at these questions and you will get the answer. Again, I am telling you, it's not a tax subject. It is not at all tax. It is purely business. So will you compare Kashmiri apple with Washington apple? Would you compare some product grown in winters versus a product grown in summers? No. Therefore, CAP will not be applied. So the same example, RPM, if I end up saying that I am performing more functions in India in terms of intensity around sales, marketing and so on and so forth, customer relationship, I would end up probably doing P&L, where I look at net profit margin. Right? So it cannot be an RPM. He said, do not add more value to the product. If I am adding more value to the product, then how would I test it? Because I am performing this function on behalf of a foreign company. These are my activities of creating the market, adding more customers, branding, sales promotion, all of these P&L will become useful. I can apply even this method, but assuming that over a period of time I have created the market and I have exploited the market. I earn supernormal profit. So much so that the product was a blockbuster in India. I can also apply profit split between India and overseas office. What is the base of doing profit split? In simple commercial terms, not in TP terms. Total profit divided between India and overseas office. Let's take the example of Apple. You did sales in India, 160,000 rupees, 2 lakh rupees, you were able to sell it, you made supernormal profits. So Apple will say, India will say, I created the market for you. I identified what should be the pricing. I defined the strategy of India entry. I should be entitled to a significant share of profits. US entity will say, boss, I'm the designer of the IP. I'm the one who is creating the product. I should earn more profits. You will end up having a debate in terms of how much profit should be in India vis-a-vis overseas office. That would be profit split. In the very example where you have the whole co manufacturing and selling it to India, India then resells to third party. This entity will be which method? Abhi to bolo, cost plus method. That is nothing but cost plus in the definition of CPM. That is nothing but cost plus method. That is different from the cost plus method, sir, that you apply for a software company. I hope you will understand now. This cost plus is different from software company where you are applying a cost plus operating model margin. It is not a method. Cost plus method in TP parlance is used where you are a contract manufacturer. You identify goods to be procured, to manufactured and then sold. That's the only function where typically you don't have any sales and marketing function. That's where you are applying CPM. And then other method. I can even apply other method. Other method is nothing but an extension of CAP, extension of any other valuation that can happen. Anyone who has used other method in any of their clients? Sorry? You please, you can tell whatever you see. Reimbursements, perfect. Reimbursements are a classic example where you can apply to other method.
I have sales only.
Sorry?
There is no transaction as such happening, like it's not the selling, you're just incurring the cost and taking it back. So how can it be?
Which transaction are you talking?
Reimbursement transaction.
So I incurred travel expenditure. I spent
Getting it back.
I spent 100 rupees.
Yeah.
I'm getting a recovery of that spend of 100 in India.
Yeah.
You would use what method?
There is no like commercial transaction happening. Like,
That's right. But for example, an employee of a foreign company visits India. He spends on his travel.
yeah, we have spent on behalf of that company. So it is fairly like there is no commercial transaction. We have spent on behalf of them and they are claiming it back. That's it.
Right.
So it can happen like any of the customers, for example, any of the customers, or if we are spending anything, for example, audit assistant go to any of the audit places, the audit firm will reimburse. So there is no actual transaction happening,
But here the transaction is with the overseas office. The guy who's coming is from the overseas company. He is visiting India. So whose cost is that? It is the overseas entity.
overseas cost. So we have just incurring.
India is incurring and then they will recover from overseas entity.
Yeah.
How would they recover?
So it is commercial term, there is no commercial terms there. So
There is no service element here and therefore it is classified as reimbursement.
reimbursement.
So when there is no service element, there is no markup. So what will you term that in that circumstance? Same cost as what third party would have charged. You are just for administrative convenience. You are recovering this. You are incurring first and then recovering from another company.
Is it like related? Is it covered under the related
Yes,
party
yes,
transaction as such?
Yes.
You can also charge an admin cost to that for managing.
Yeah, you can. But will the parent company allow you to do so? Booking tickets in India only for the administrative convenience. Why would the overseas entity allow? I think this lies more from a commercial side. Why would they allow you to charge? Because there is a fee. Unless I remember there is an MNC, large IT company, they have an entity created only to do travel booking for travelers. Okay, so I think I have come to the leg where I will just show the deck, typically what it comprises of. Maybe 5 minutes or 2 minutes we can just go through that, and we have our head teams here as well. So I think in the scheme of things, what you have to just look at is the business transactions. First head would be related party or non-related party. The definition of it is very simple. Unlike in India where you have associated enterprise based on varied criteria, it's fairly simple in terms of ownership. 50% will become related party. Element that you need to watch out for is whether it is a connected person or not. When it comes to individuals, this becomes a little too peculiar as far as UAE is concerned. Otherwise, by and large, in terms of transaction flow, everything as it is in India continues to apply in UAE. They have the same thresholds for maintaining CBCR, TV study report, master file. All these are pretty much prescriptive. What comprises of the documentation is also prescriptive in terms of OECD guidelines. Nothing changes as far as UAE is concerned. As I said, connected persons are nothing but those relationships in terms of individuals. Up to 4 levels, it goes up to great-grandfather, grandfather, father, son. Transactions between any one of them, it becomes a transaction to be reported. In terms of any other payments, as far as discussions around arm's length price is concerned continues to be the same as it is in India. Methodologies remains the same, nothing changes. As I said, even the method of other method again remains the same. The only difference that you have to think through is there is no litigation experience unlike in India. You don't have such things in the UAE. I don't know if it starts having audit. I don't know what will happen next. Okay. We've discussed all these things already in our examples. We have spent enough already. I don't have any further things to share or communicate. As I said, this is nothing but individual 50% share in terms of ownership, 4th degree of kingship, that's what I refer to now. Okay. Anything so far you have any questions? Other than the favorite topic that I will raise. Other than that. Anything else?
Thank you, CA Uday. I'm pretty sure after probably lot of sessions, whiteboard was used for members study circle meeting. Thank you for that. And I'm pretty sure the session was very much practical, and the knowledge that has been shared across will be implemented wherever you get assignments relating to the UAE. I request CA Gautam Parmesh please to come on the dais and honor the speaker with
Thank you so much. Thank you.
Once again, I would like to thank CA Uday for sparing his time and taking out his time for sharing his expertise regarding the transfer pricing of UAE structure as well. Once again, I would like to thank all the members, and also I would like to recognize CA Geeta, the past chairman of SIRC of ICL. Thank you so much for being here. We'll see you in the next study circle meeting. Thank you so much.